Hello and welcome to Top 5, a wrap up of 2024. We are going to have a big deep dive into the 5 best performing areas of equities, FX and indices. As always, I'm Evan Lucas for GO Markets, and please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it relied upon as any form of personal advice. GO Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it relied upon as any form of advice at all. It is just general in nature only. So, Top 5 in equities. Let's go through what the ASX players have done out there. And it's been quite a telling year if you're in tech or if you're in pharmaceuticals. And that's what's leading the numbers there. Now, admittedly, the best performing stock so far, and we are talking about this in the midway through December, has been Zip Money of all things. At one point, Zip was up 739% for the year when we had gone through 2024. As we speak, it's 439%, so it has come off a fair bit, and that's probably down to the fact that Larry Diamond, the former co-CEO and founder of the business, has stepped down at the back end of the year. But it's all off the back of better than expected earnings, the growth that they're seeing in their US sort of division, and the fact that they're finally starting to catch up to Afterpay. It also shows very clearly that, interestingly enough, credit is still there and credit growth has been there. That their development online has been where they've really moved and moved strongly throughout this year. And there are views, according to some analysts anyway, that next year in 2025, the Zip Moneys of this world could also have another pretty standout year. Probably not as much as they've done, but would be up there. Second place goes to Life 360. And again, looking at Life 360, 235% for this year. It's on the technology from strong listings, both here and over in the NASDAQ. Again, when you've got a player of this kind of technology, it's probably actually more likely been wrapped up with the fact that, yes, they delivered decent results, but also the fact that tech this year was a standout without fail. There is no doubt, you look, and we'll come to this in the indices section, the NASDAQ is a standout player on this space. So, moving to third position. We're looking at Sigma Pharmaceuticals. Now, this is not off anything Sigma has done, but what they're going to do. And that is the joint backlisting with Chemist Warehouse. And that hasn't happened, which is why this isn't just a 2024 story, it'll be a 2025 story. When that happens, you are talking about forming what will probably be a top 20 ASX 200 company. And that in itself is why you've seen Sigma Pharmaceuticals for this year jump so high. It's 188% as we speak. And that merger, acquisition, backdoor listing, JV, whatever you want to call it, is the reason Sigma is there. So you probably can put that one as more advantageous than anything directly Sigma has done. Which brings me to the next one, Pro Medicus. This is a company that has been astounding because not only has it done 163% in 2024, Pro Medicus has been exploding for the last 10 years. It is and now the largest imaging group on the planet in what it does, and it continues to make incredibly savvy decision making. The technology that it offers inside its whole suite and the rollout in American hospitals, also along with Europe, has been astounding, and it just continues to see this company go from strength to strength, and that's what we saw in 2024 and why it sits in fourth position. It is now over a $10 billion company. Just less than 15 years ago, it was pretty much starting out. What an incredible movement and what a really impressive story Pro Medicus has been. Finally, getting to Telix Pharmaceuticals. Again, when you have a pharmaceutical player like this, Telix in that radiology space, when you start getting approvals that work and you get through stage 3 medical trials and get FDA approval, it's going to be a good year. And that's what's happened with Telix. Telix coming in at 155% for the year. That's very impressive, but it is off the back of, as I mentioned, those additional things, getting that, particularly that stage 3 tick off, and also getting the FDA approval for its radiology drugs makes Telix very exciting and why it finished 5th this year in the equity space. So let's have a look at indices. With the indices, we are going to stay with the big end of town. So we are going to look particularly pretty much anything that's in the MSCI 20 and where they currently sit. Interestingly enough, for the second year running, 2 US indices sit 1 and 2. And that shouldn't be a shock considering what's been going on over in the US and all the movements that have gone around it. At the moment, as we speak, a 36.2% increase on the Nasdaq has it sitting in top position in the overall movement for the big end of town. There are other players you can look into, particularly the emerging markets, somewhere like Pakistan. You can also look into South America, somewhere like Argentina, for example. They have been the best indices globally, but that's not what we want to concentrate on. What we want to concentrate on is why those players continue to do it. And the Nasdaq has been the absolute beacon. The rise and further rise of things like Nvidia, the impact that Apple, Microsofts of this world continue to have on tech is why you continue to see the Nasdaq driving ahead. This will be the third out of the last 4 years that the Nasdaq has done more than 20% per annum. That is incredible and a staggering number to look at, which brings me to the second major index, the S&P 500. It's sitting at 31%. The Mag 7 that sit inside it has been the major reason it's been driving that for the last 2 years. We haven't seen 2 consecutive years of 20% or more in the S&P 500 since all the way back into the 56 and 57. Before that, you go back to 36 and 39, and then back to 1918 to 1919 in this kind of number. And you think about what was going on then, end of the First World War, along with what was also going on in the 30s, the roaring 30s before the Great Depression. So that's a staggering thing, which would suggest that 2025 might be a little bit different, but you can't go past the fact that the renaissance in the US is incredible. The economic growth and all monies leading there is why we find ourselves in this situation. You then move across to the other side of the world. The Hang Seng is actually sitting next, and it sits at 26.7%. It's been a massive rally back for this part of the world. It's been a very tough period for particularly the mainland China indices, and 2024 has finally seen them come back. It has come from a low base, and that needs to be made very, very clear, and it explains why they sit where they are. But it has been a good year finally, and 2025, with the possibility that Beijing is going to stimulate as we go through a tariff war, will also mean that the Hang Seng could remain quite interesting indeed. Next one, we actually find ourselves in Europe. Surprisingly enough, it's actually the DAX. And that's despite the fact that its nearest partner in France has actually seen a negative year off the issues around geopolitical numbers. But the DAX is up 26 and a bit percent as we speak. And that is, again, despite the fact that manufacturing's there is going to be pressure in 2025 about exports, particularly motor vehicles. But overall, the Germans have managed to get themselves back in order. They don't have as many headaches as the other peripheral nations. Inflation also in Germany is in a much, much better space. And that's why they've been doing reasonably well with particularly their manufacturing, pharmaceutical and financial services, the reason the DAX up. Which brings me to the last one, which is the Nikkei. If you had to ask me this question as little as October, it would have actually been third. It has fallen. We've had political instability. We've had a couple of other issues in the Tokyo Stock Exchange. It's brought it back, but at 21.8%, it's still a standout year. And you can't deny that Japan is finally getting out of its 3 decades of Japanification, as it's allowed to be called, otherwise known as stagflation. And it's there. You are actually starting to see growth return. You've go across the board, and the offerings that it has explained why Japan has finished 5th in the indices for this year. Now we come to the top 5 in FX. It's hard to put this one down because, again, when you look at FX, it's all about the pairs. And pairs are hard to compare, and then you go across the crosses as well. So what I want to do, it's rather than doing a top 5, is probably point out what has done well and what hasn't. And clearly, straight off the bat, it has still been the year of the US dollar. Because if you look, 2024, most pairs and most crosses have bounced through ranges and are almost going to end up where they started the year. You look at euro dollar, you look at also pound, you look at a cross at dollar yen. It's been all over the shot, but in the main, the strength that's in the USD has probably come to the fore. And all of those have their own different problems inside them and has all led them to move through those ranges. But it has been that year again, the US dollar once again showing why it is the leading currency on the planet and something that's unlikely to change anytime soon. So that brings me to what comes next and who's after that. Well, you probably can't put your finger on it, but you've got to look at things like what's happened with the Swiss franc. You've also got to probably put your hand up and say that the euro's done slightly better than expected. Outside of that US dollar sort of scenario, the euro's been ahead of expectations. It's the same with the Swiss franc. Also, again, the safety net that comes with the Swiss franc is probably why it's there. Because the rest, the Aussie, the pound, the CAD, the Kiwi, they've all had structural issues. This was supposed to be their year for these kinds of currencies. It just didn't eventuate. And probably the reasons for it have been individual issues. The Aussies had issues around China. The fact that although the RBA hasn't moved rates, you've had issues of strength in the US dollar. You then look at the commodity prices as well, and that's been a way, not just for the Aussie, but also for the Kiwi and the CAD. Oil, another player, and part of the reason why the CAD has probably started to suffer through this year. You look into Europe, and there's all sorts of problems that are going on there. We have seen a change of government across most of the continent. You've also seen a change of government in the UK, and what's gone on with currently the new Labour scenario has not been what's been expected and has seen the pound jump all over the place. Some of it's really bullish, some of it's actually rather negative. So that's made currencies a really tricky period this year because, as I said, the crosses and the pairs have fluctuated through, but if you actually have a look, we're almost back to where we started with all of them. So that brings the question, 2025, and where does that sit? Again, it's all roads going to lead to the US dollar because under a new Trump administration, possibly a slightly more hawkish Fed, although they are cutting rates, could again see a traction or at least non-selling of the greenback that could lead to once more a really interesting and tricky year for the currencies.